Hello everyone, welcome to yet another day in the Clown Decade, the decade where things are only going to get worse before they get better. And oh boy, it is being massively signalled that things are going to get worse come autumn. Because we are seeing articles like this all the time, for months I would say. Why Rachel Reeves may have to raise taxes in October. So Rachel Reeves has set out her plans for the UK economy in her spring statement and is on track to meet her self-imposed rules on public finances, which she has said are non-negotiable. So she set rules for herself and is trying to follow them as much as possible, and in turn it just means that the only thing she can do is keep raising taxes, despite the fact that these taxes are bringing in less and less receipts than intended. On the face of it, that sounds like a good thing. Why are people saying that she may struggle to meet them, and the only way she may do so is by raising taxes? It's a complicated picture. It's not BBC, it's not at all. It's just stupid economic policy. But there are essentially 5 steps to get from where we are now to tax rises. So first thing, there's not much spare money. Ahead of the spring statement, the Chancellor has been under pressure with speculation over how she will be able to meet her self-imposed rules, one of which is not to borrow to fund day-to-day spending. Good luck with that. In October, the government official economic forecaster, the OBR, said that Reeves would be able to meet that rule with about £10 billion to spare. And as I've been through over the past few months, that's gone down and down and down and down. An increase in government borrowing costs since then meant that that room to spare had disappeared. Yeah, it's gone. It's just not there. Now big welfare cuts and spending reductions in the spring statement have restored it. Almost 10 billion might sound like a lot, but it's basically a rounding error when it comes to the government budget of about £1 trillion a year. Yes, it's about 1%, which really isn't much headroom when you think about it. Anyway, the government also raised about £1 trillion in tax. Well, that's going to be ruined with thousands of billionaires leaving the country. Millionaires leaving the country. In fact, it is the third lowest margin a Chancellor has left themselves since 2010. The average headroom over that time is 3 times bigger at 30 billion. So she's really on a narrow corridor here, and given that she lied about being an economist, I don't see things going well for her. The next 2 points, that predicting the future is difficult. I really don't think I have to go into detail on that. The only thing that I would say is that an awful lot of predictions that were made when borrowing costs were quite low. Anyway, the budget came out and then borrowing costs went up because it's clear that Rachel Reeves didn't know what she was doing, and that's also what cut off an awful lot of the headroom. Anyway, the other issue is that there has been a car tariff announced by Donald Trump, which is 25% tariffs on cars and car parts going into the US, which is quite a disaster for, obviously, the UK export market to the US. Reeves admitted the car tariffs would be bad for the UK, but insisted the government was in extensive talks to avoid them being imposed here. According to the OBR, these import taxes would have a direct impact on goods totalling around 0.2% of GDP. Before Trump's announcement, the OBR has warned of the risk of an escalating trade war, and while the proposals do not exactly match the watchdog's worst-case scenario, which would see the UK retaliate, Hughes said it had elements of it. 0.2% is a tiny amount, but it will affect the economy. Yeah, 0.2% of the economy is still, bad. It's certainly bad for the car industry in general. The OBR's worst-case scenario is a 1% knockoff of economic growth, which I don't think that means it goes from 1.6% to 0.6%. I think it means it goes from 1.6% to 1.6% if you're rounding. So it's not too bad, but it's still not great for tax intake, which is what they're relying on to not end up in the same position as, say, I don't know, Liz Truss that they've been going on about for years. Anyway, the last issue that she has is that, well, due to uncertainty and the fact that everyone feels poorer, firms and people are going to stop spending. The trade policy, let's not just blame the trade policy, let's not just blame 10% tariffs from the US, and the fact that nobody seems to know whether he will follow through with his threats, this was before yesterday's announcement, or U-turn on them, or how he will react to others, is just one way his presidency is making the world so uncertain at the moment. The war in Ukraine continues, and despite Trump's pledge to end it, come on, the UK, along with Germany, has said it will increase defence spending. Trump has long called for European members to spend more, so well done, Trump. You managed to get them to do that finally. But domestically, businesses are also facing a worrying time as there is a brace for a rise in costs in April as employers, national insurance contributions, national living wage and business rates are all set to go up, all of which are direct Labour economic policy, all of which are going to cause issues. Noticeably, my local high street has had a few closures over the past couple of months, and I can only imagine more are going to happen. Some firms have said they will put off investment decisions as a result and may have warned of price rises or job cuts. If these materialise, then it will knock growth. From the looks of it, at least, both anecdotally and from statistics I've seen, everything is getting worse in terms of the economy, so yes, this is why we end up having this last part, which is what I'm talking about. So either she breaks the rules, not happening by the way, or she has to raise taxes. Probably happening. Reeves has staked her reputation on meeting her fiscal rules, pledging to bring iron discipline and provide stability and reassurance to financial markets, in contrast to the former PM Liz Truss, whose unfunded tax cuts, there was one tax cut, it brought in millions rather than billions, the rest of it was just not raising them, and the issue was not the unfunded tax cuts, it was the biggest promise of state spending ever, and Labour wanted more. So let's not rewrite history here, BBC. Anyway, it spooked the markets and raised interest rates. Both those are true. Both those have happened with both those happened with Rachel Reeves, by the way. They're not saying that she spooked the markets, though, are they? Thanks, BBC. So if she is still to meet her rules and not borrow to fund day-to-day spending, that would mean either more spending cuts or tax rises. The government has already announced big cuts to the welfare bill, as well as a plan to cut civil service and abolish several quangos, including NHS England. Fine. But as Paul Dale, chief UK economist at Capital Economics, put it, non-defence spending can only be cut so far. Actually, no, it could be cut a lot further in my ideal world. By leaving ourselves so little wiggle room and with such a precarious economic outlook, we can surely now expect 6 or 7 months of speculation about what taxes might or might not be increased in the autumn. Well, The Guardian was reporting largely the same thing. It have to be on the same day as well, and this is what I mean by this is a concerted effort almost, or, you know, the loose network is all reporting the same thing, which is that, look, in a few months' time, you're going to be paying more taxes. Because as The Guardian say, Reeves may have to find further cuts and tax hikes amid economic gloom. The rising costs and global uncertainty may force Chancellor to turn to pensioners and wealthier taxpayers, despite the fact they, well, not necessarily pensioners, but wealthy taxpayers are already paying the vast majority of the taxes. It's crazy. It's honestly crazy. And this article actually cites other think tanks. So the Institute for Fiscal Studies warned the Chancellor may be forced to consider a freeze on tax thresholds, hikes to capital gains and potentially pension taxes. We'll go into all that. The think tank said Rachel Reeves' choice were extremely unpalatable in a risky and changing world, as Trump's actions overnight on tariffs demonstrate all too well. Again, this was written before the tariff announcement. MPs are expected to vote on the coming months on government's welfare green paper, with significant numbers of Labour MPs already on the brink of rebellion. New figures released on Thursday showed a record 4.5 million children are living in poverty in the UK. That's relative poverty as well, so bear in mind that's just 60% of median wage. It's not absolute poverty. That was a thing brought in by Blair and Brown to effectively get poverty into the newspapers, to give them an excuse to do all sorts of things with money, and then attack the Tories, of course. However, some in government privately fear welfare may need further reform if benefit claims still continue to rise as the economy fails to improve. Yeah, there's 500,000 people under the age of 30 who have never worked. There's 1 million people who aren't NEETs as well, not in education, training, or can't remember what the other E is. Employment, that was it. We basically have a load of young adults who are effectively supposed to be the up-and-coming people who are going to be the new taxpayers in 10 to 20 years' time, not even getting the first step towards there, either because they are on disability claimants, are managing effectively to be subsidised by their parents to be out of work. I know that happened to me for a few months. Effectively, they just have better options than working 40 hours a day in a job they hate for pay that probably isn't too much better than benefits they're already claiming or the subsidies they're getting from their parents. It is not a good way to run the country. The Treasury Department for Work and Pensions hope that they will not have to revisit any major welfare changes after legislation is passed from Liz Kendall's Green Paper, but further spending cuts are likely to be difficult after a spending review concludes in June. Reeves said on her interview on Thursday morning after her spring statement, when asked about tax rises or further cuts, she was not going to write another 4 years' worth of budgets at the spring statement, but repeated her promise not to raise taxes on working people. Which might be good to hear, but it is quite funny at this point how the minimum wage rise, people on full-time on minimum wage now we are past the April 1st raise, has meant that actually these working people are paying more taxes than ever, and not only that, but it is impossible to have a minimum wage job at full time and not actually start paying off your student loan, say. So that's affecting them too. Well, actually, the plan's changed. I was going to say in my anecdotal world, that would probably be about £9 a year or something like that, but it's probably a lot more now. So yeah, the economy is just a total disaster, but what do you expect from someone who lies on their CV about their economic ability? Anyway, the Times got in this as well. I'm not going to read out the headline, that is another disaster piece, but they've now printed this post the Trump tariff thing, and now we have another think tank saying it's worst case scenario. Unironically, the National Institute of Economic and Social Research says its model suggests that Britain's growth will fall to zero next year because of the impact on global tariffs. Ahmet Kaya, the principal economist, said the US levies were pretty close to our worst case scenario, which is quite funny when you think about it, because we actually got off pretty lightly comparatively to other countries when it came to these tariffs, but 10% tariffs are still a disaster case. Although much depends on how the Bank of England responds to an inflationary shock caused by tariffs, Kaya said that there was a huge risk of recession next year and there would be a serious impact on Britain's economy throughout the next year. And, well, to be honest, those of us that have taken the red pill on economics will know we're probably already living in a recession and all our growth is effectively fake. So it's actually pretty impressive they managed to get us in a recession, but there we go. What do you expect from someone who lies on their CV about being an economist? Although GDP is forecast to bounce back, Kaya said that its model showed the remaining 1.7% points smaller than previous forecasts and that the government probably needs to increase taxes or change the fiscal rules in the next budget. The Oxford Economics Consultancy has downgraded its 2026 growth forecast from 1.5% to 1% and said that an overhaul of fiscal policy looks even more certain. I'm going to get that meme up on the screen right now and let you know this is how I've been feeling for some time, but it gets closer to real every damn day. And to make it worse, the Telegraph decided to put the 10 taxes that Rachel Reeves will be eyeing up in her autumn budget, so this is what you can look forward to in about half a year. So number 1, extending fiscal drag. Income tax thresholds normally rise in line with inflation, but were frozen by the previous Conservative government in April 2022. The freeze was scheduled to remain in place until 28, but Ms Reeves could ease pressure on public finances by extending it. A 2-year extension would add over £8,000 to a higher taxpayer income tax bill. The Treasury has denied the Chancellor will do so. The most ridiculous thing about this, by the way, is that the freeze in 2022, it's now 2025, was effectively at a point where it's effectively equal to about £20,000 now. And again, as people keep pointing out, minimum wage actually puts people above this now. So unless you are part-time, there is absolutely no way you can work full-time and not pay income tax. This has never happened in Britain before, and apparently the number one thing they're going to try and do is effectively stealth tax working people, despite the fact they're saying, oh, taxes won't go up for working people. Yeah, it's nonsense. That's exactly what that is. Next up, instead of the fiscal drag, it's just outright lowering the thresholds. Chancellor could go in further by reducing income tax thresholds, which would be absolutely insane given the inflation that we've had. Jason Hollands of wealth advisor Evelyn Partners said further tax rises were a real risk if the economy continued to stagnate, and he said ultimately, if you need to raise significantly more taxes, you're going to have to look at one of the big tax rates, which of course is income tax. Of course, this after saying that they'll never increase taxes on working people. Well, this is another direct tax on working people, so well done, you've broken a promise. Number 3, raising national insurance. Jeremy Hunt announced a 2% point cut to employee national insurance contributions in last spring's budget, lowering the main rate of employee national insurance contributions from 10 to 8%. It followed the previous 2% point reduction in January 2024. Along with income tax and VAT, national insurance is one of the big 3 taxes that account for around 2/3 of government tax revenue, and obviously increasing it back to where it was before 2024, well, that's once again a tax on working people. In other words, the Telegraph is trying to scare working people here, while at the same time Labour are trying to avoid this. So it'll be interesting to see what the other options are. Number 4 is cutting the cash ISA allowance. So the government confirmed today that it is considering reforming individual savings accounts or ISAs to nudge more savers towards the stock market and away from cash. This means that it could restrict the amount of cash that you can put in per year into an ISA, which is up to 20,000. The key question is at what level the cap might be set. An annual cash limit of 10,000 would not impact many cash ISA savers, but $4,000 which is being speculated on, would prove a blow. And that's because they want people to move over to the stock market because they can put VAT on, capital gains on it, rather than cash ISAs, which are tax-free. But the whole point of cash ISAs was to make people save for their own future so that there was less a burden on the government. Well, Labour doesn't want that, do they? They want to expand the government, and they've managed to make it literally the biggest government ever. So well done. Next up, they're after pensions, which probably makes the most sense, given that old people don't vote Labour typically. Pension tax relief allows individuals to receive tax back on pension contributions. Basic rate taxpayers get 20% relief automatically, but higher and additional rate taxpayers can claim up to 40 or 45 respectively. Pension tax relief, known to be an area Ms Reeves, as well as other chancellors, have considered cutting to raise revenue. She wrote in an article in 2016, probably copied off Wikipedia, that a flat rate of pension tax relief of 33% would be a welcome boost for basic rate taxpayers and a cut in savings subsidy for higher earners. This would be my favourite one to go for because it's easily reversible by the time I'm pension age. Next up is further hikes to capital gains tax. The rate rose from 10 to 18% for basic rate taxpayers and from 20 to 24 for higher rate. Mr Holland says, I think capital gains tax increase we saw was at the lower end of the expectation. Might they look at nudging it up a bit more? It can't be ruled out. There was even talk of aligning it with income tax, but that would be very damaging for entrepreneurs. Could they come back and add a little bit more? It's possible, yes. The reason a lot of the left go on about capital gains tax, why is it not in line with income tax? And it's because there's a massive risk that's put on top of capital gains. It's unrealised in terms of the value. You only get the gains when you sell it. That's when you pay the tax. If you're expected to, say, do a wealth tax based on all your wealth, it's stupid, because you end up having to sell a load of stuff to pay that tax, and guess what happens when you sell the stuff? You have to pay capital gains as well. That's why the left love it, because you're taxing wealth. Yeah, but it's wealth that they don't actually have until it's sold, and it doesn't necessarily sell for that price. Next up, axing inheritance tax gift allowance rule. So wealth advisors have warned that the inheritance tax 7-year rule is under threat. Tax experts say that they have seen an increase in clients giving chunks of their wealth to family members amid fears the rule will be extended to 10 years or scrapped altogether in a renewed drive to raise revenue. Inheritance tax is usually paid at a rate of 40% on estates above the nil rate band, which is currently at $325,000. The 7-year rule allows a person to pass down money or assets tax-free or at a reduced rate up to 7 years before death. And then it's obviously not affected by inheritance tax, but that goes up to 10 years, then they give whatever they can to their kids, and then hope that they live for 10 years rather than 7. Inheritance tax should just be abolished, but people are obsessed with funding hotels for illegal immigrants, so there we go. So now we're getting to the less likely ones, I guess. Scrapping the unlimited gifts rule, I don't even know what this is. So Ms Reeves could also target the rule that allows savers to give away potentially unlimited sums without paying inheritance tax. The gifts out of surplus income exemptions let savers pass down money during their lifetime without worrying about the 7-year rule. These gifts will immediately leave their estate provided they meet 3 conditions. First, they must come out of income, not savings. Second, they must form part of a pattern, i.e. the saver give their grandchildren around the same amount every 2 months. That should qualify, so in short it's a regular subsidy. And third, they must not lower the donor's standard of living. The exemption is uniquely generous as it could be seen as the Chancellor as ripe for the chop. Savers with an inheritance tax liability who can afford to give away wealth may want to consider using the current gift rule while they still can. Yeah, it's also worth noting that the Telegraph typically has an older readership, so they're going to be going on about pensioners quite a bit. So number 9, it's a wealth tax. Calls for a wealth tax have grown louder as the government's clamped down on disability benefits. Diane Abbott is amongst a number of Labour MPs who have urged the Prime Minister to levy a 2% charge on the richest in society. According to the campaign group Patriotic Millionaires UK, a 2% charge on those with assets more than 10 million could raise 24 billion a year. And yet not a single millionaire from Patriotic Millionaires has done this voluntarily, so that tells you all you need to know. This is the typical Gary Stevenson answer, and it's absolutely not an answer to fix our economy because it basically won't do anything, apart from make a lot of rich people want to leave and slowly eat away at their savings and assets. The final one is stamp duty, so landlords and second homeowners could go from 3 to 5%. Oh, that's already been increased, adding thousands of pounds to property purchases, but the Chancellor could go further still, according to the property expert Phil Spencer, who said, given the government's current financial challenges, if the Chancellor does opt to change the stamp duty rules, she's only likely to move the tax rates one way, and that's up. So there you go, you could be adding even more money to the tax bill for buying a house, though to be fair it's for second home, so I'm not too bothered about that at the moment. But hey, at least Gary Stevenson will be happy, and that's all this government wants to do, make him happy. But yeah, that's where we're up to in April of 2025. We can look forward to things only getting worse. But it's the clown decade, so they get worse, but then they get better. It's just that things aren't going to get better till about 2029, so enjoy the next 4 years of this. But there's no way I can see all this economically disastrous news come through, especially with the Trump tariffs as well, which is, any sort of tariff is disastrous, but 10% is ridiculous, although we did get let off easy compared to other countries. That's not good for you Americans either, but hey, we'll see where it goes. But this needed commenting on, otherwise I'm just going to go on about it to people that really don't want to hear it outside of YouTube, so at least you all get to click on this video and be depressed by your own actions. So, don't blame me if you get depressed. Anyway, that'll do for today. So, tomorrow it's Laughing at the Guardian, so do come along to that. Videos out as and when I can make them. Do become a subscriber, like and comment on the video. Do give me money as well, whether through super thanks, through super chat, or via becoming a member. They're all great ways to help the channel. Right, with that, that's everything I had for you for today. So once again, thank you very much for watching, and until next time, goodbye.